Welcome to the On the Rise podcast, where we talk about time freedom, passive investing through real estate, finance, and mindset. Let's dive in. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice. I am not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. All right, welcome back On the Rise podcast listeners. Thank you again for jumping into yet another episode of the On the Rise podcast. I am your host today, Jeremy Dyer, and I have another amazing guest with me today. I have the one, the only, Phil Ganz. Phil, welcome to the show.
Well, thank you so much for having me. I'm excited to be here.
I am too. And for my listening audience, Phil is the president and founder of Next Wave Mortgage, bringing over 25 years of industry experience and more than $1 billion in personal loan closings. Dr. Phil, I'm calling you today, Phil Ganz, but Dr. Phil and I are going to be talking a lot more about kind of the investing, marketing general or landscape. We're not here to talk specifically about mortgages per se. But Phil, I'd like for you to maybe fill in for our listening audience a little bit more about yourself, your background, your journey, etc.
Yeah, I'm from Boston, Massachusetts. I currently reside in Florida, but I started investing at a young age. I bought my first condo in West Roxbury, Massachusetts, which, by the way, that was like the cornerstone of what I would say is like my investments. But I would say that was also, I made a very big mistake because it should have been in Brookline, Massachusetts. And I kind of got a little cheap in the beginning because it was my first place and I missed out for the same price basically. He said, well, why does that, matter? Because when I went to sell my place, about 7 years later, one was worth 30% more than what I paid and the other was worth double what I paid. So sometimes location does matter.
Yeah, totally. I couldn't agree with you more there. I know in your current space today, primarily on the mortgage side, you really built a successful company, not on what I would call a physical land grab, but what I would call a digital land grab, with now having over 155 different websites. What did you see early on, that most lenders still don't understand about, really owning individual people's attention versus chasing after it?
Well, here's the deal that a lot of bank CEOs, they're more concerned with like their biggest concern is probably wire fraud or, not that ours isn't, but they're dealing with like big things. Being a smaller company, it was more nimble, right? And I have a marketing background. So I wanted to, take advantage of, what I know, which is mortgages and marketing. Most people that work in these marketing departments, they've never done a mortgage. And I understand the nuances and I understand, data structure of how Google needs to see some of these websites. Because a lot of people, here's the bottom line. Most companies, and I mean 98% today, have lost business because of AI. ChatGPT, Gemini, they're down. We're up tremendously. And you're like, well, how is this possible? Well, we have a better idea of where you need to niche down sometimes before you niche up. And so we have a lot of individual websites that will come above the AI because they're laser focused and they provide that that hug that Google wants to see called they want that expert opinion. So that's been like a really like big success for us at Next Wave Mortgage. Our goal is to be Rocket of Florida, which we're on our way of doing, by the way. But that's what our goal is.
Yeah, that's great. That's great. And it's interesting you bring up this topic of AI. I love to talk about this because it's just transforming, day by day. And I recently had a small minor surgery, and I was a little bit, nervous about what that experience was going to look like. And of course, I just started talking to my, Jeremy, AI, right, which is predominantly Chat, GPT, and I'm basically going back and forth with this AI. It's making me feel a little bit more comfortable about the procedure that I'm about to have. But I got done with that conversation, Phil, and it almost came across like I had a doctor in my pocket, kind of a thing, right? And second to that, one of my buddies was recently telling me that, Jeremy, you can literally take a picture of what is currently in your refrigerator, and ChatGPT will come up with a menu plan based upon exactly what you have in your refrigerator today at any given time. So the world of AI is fascinating to me, but let's be honest here for a minute, okay? AI is exposing mediocre businesses. All right. So, in your opinion, Phil, how has AI, driven lead generation, really separated the winners from the losers in your space, or really in any, entrepreneurial endeavor?
Well, this is what's happening. The marketing people are getting exposed. Before, think about it. Go to any of these major companies. You go to what they're looking for. None of them are mortgage experience. And I'll show you kind of like the multi-step process. Even if a marketing person, right today, says, "Oh, I have a great piece," they got to send that to compliance. Compliance is so scared of like any mistakes, of offending anyone, that by the time they get done with it, and these compliance, they don't do mortgages, they don't understand marketing. By the time they're done with it, it will be below grade of what it won't be better, because that's why people are down now. People are down now because their stuff stinks. This is a fair way of your look. My parents said, "Look, you got to do something besides basketball. You ain't gonna be like 6'2", right? We got to try something new because you're just not gonna make it." And this is what AI is telling a lot of people: your stuff stinks, and it hurts their feelings. We're up, and you know what? We just discovered something that was really good for one of our leads. It's the rewards are bigger now. We discovered something in one day that will increase our leads 25% for the whole company. What people don't realize is in sports, you look at a touchdown, it's only worth 6 points, no matter how you cook it, right? A home run, it can only be worth 4 points if it's a grand slam. In business, you can score 10 million points. I love it. It's actually made the stakes higher. You're no longer mediocre anymore. AI is based about inputs, right? So if you can beat the computer and provide real knowledge, and that's what they want, you're going to win. And that's what's so exciting, is that the mediocre stuff that people put out anymore, great. It actually helps me. This is how we've gained a lot of traction. And by the way, we can create websites now way faster than ever before. Creating a website in an hour or 2 hours, simple. What it used to be take like 90 days. I'll tell you a quick story of how crazy this is. We were creating these microsites or 1 or 2 page websites to match domains, right? And it used to be, well, we'll do two every 90 days or 60 days. Then it was, we'll do two every week. Then it was, we'll do, two in a day. Now it's, you can go so much faster because the programming, that the way that you can structure it is like unique websites much faster. And this is easier for people like me because I can use the AI to write the code. And if you're dyslexic, look, I am. Before, if you're off one thing, it was hard. You'd be there forever. Now, all of a sudden, you take someone like me and my team, we can collaborate. We become like Microsoft programmers mixed with like mortgage experts. And so you can really rise above. And this is why we're getting so much. We have a lead problem, which is what we don't have enough people to call our leads, right? Luckily, we can hire a couple people, but it's I think this is really exciting. People shouldn't be scared of AI. They should embrace AI. It's a tool, and it will eventually help you succeed more.
Yeah, 100%. And I couldn't agree with you more. I think it definitely increases, the velocity and the speed in which people go to market. It helps with your consistency. And I agree, like, listen, at the end of the day, the quality continues to improve, day in and day out. It is the future. And if you don't embrace it, you're going to be stuck in the past. With over $1 billion, all right, in closings, numbers don't lie. What's the hard truth you would say that consumers don't want to hear when they bring you a deal that they're emotionally attached to?
Boy, that's a really great question. I try to get to the truth right away. And I think that's important, to tell them if it's a good deal, if it's a bad deal, and like why. Because ultimately, like, the big mistake I think a lot of people make is they say yes. I'm not there to be their friend. And sometimes that's like not always great, right? But people trust you. This is the most important thing, right? So, you look at it and you tell people like why and how it actually affects pricing on mortgages, and you get into the nuances and you have conversations. Like, in my world, I do a lot of debt service ratio loans. What that means is that we want your mortgage payments to be less than what you're collecting for rent. So if it's equal, so if the mortgage payment is equal to then the rent is 1 to 1, right? So we want the rent to be higher than the all in, right? And if it's lower, that's not good. Not to say that we can't get the deal then, but we can. But you pull these levers, like you want the lowest rate, the better terms. You got to dig into the numbers, why people are evaluating things. So by being honest with people, you really, like, I have great deals because I'm a broker, but you allow them to move forward, mentally, if this is a good deal. You don't want, what I hate in life is, I'll tell you what I hate. I hate dribs and drabs. This is like a pet peeve of mine, is when people make me do a little this, a little that. No, no, no. We're going to get right into the facts, right? And I think if you do that, you save everyone's time, because you can always get more money, but you can't get more time. And the only thing better than free is fast.
Yeah, makes total sense. And I appreciate that breakdown. And just for my listening audience that may not fully understand what DSCR, means or stands for, is it's debt service coverage ratio. A 1.0%, or I guess 1.0 DSCR would effectively mean that your operating costs and your debt service are equal to that of your revenues, right? And so important metric, certainly for both lenders as well as mortgage brokers to understand, as well as obviously investors. Phil, I'd like for you to just maybe just kind of briefly talk about that, one deal maybe memory that you have, since you've done so many deals where it was kind of sight on scene, this deal is trash. And maybe you had some recommendations as to how to turn a trash deal into something that works for both the buyer and the seller, through some type of a creative, restructuring.
Yeah, I mean, it's funny when the market is hot, you get more of these trashy deals, right? And a lot of times, because there was a year, I'll tell you this, where I had actually done the most renovation loans in the state of Massachusetts, right? Like, but the market got so hot, I went from like number one to like not doing many, because sometimes it just doesn't make sense. The biggest thing is to work with your buyers, help them evaluate the property and restructure the price. Because sometimes, the worst deal is a bad deal, right? Walking away. I think of how people walk away a lot when something is bad. That is what I really want from people, because it didn't happen to me. I gotta be honest. This didn't happen to me. I was working with someone on a deal, and I really trusted this person. I was gonna buy with him no matter what. And I ultimately did. And like, I bought this home, and like, he just, it wasn't a good deal, and it ended up becoming an albatross. I ultimately made a little money on it, but like, I lost time. And because I lost time, that really cost me a lot of money. So if you said, did I make any money? Yeah, maybe I made 3 grand, but I was stuck in this thing for 5 years, and it prevented me from doing many other deals, right? Versus where one of my best experiences been is that the people shot me straight, and just said these things were crap, and they got me in really good deals. And I think that really helps, is that when you work with someone that says no, they have your best interest, and they really dig into the numbers, right? I don't want a friend when I work with, like, they gotta have a good bedside manner. Don't get me wrong, but I don't want a friend. I just want someone to, like, they can lead me in the right way, because ultimately I am going to rely on you to, like, help me get there. If you're going to win a deal, you got to have the best people.
I'm Zach Haptonstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in the large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investor. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
Yeah, you definitely need a good business partner along the way. So that makes sense. And sometimes those business partners, are really, third party suppliers, as opposed to in-house, business partners. You and I both know, as well as my listening audience knows, there are some key influencers out there, in the space today, that are constantly preaching, to investors and the consumer that debt is a bad thing, right? So can you talk a little bit maybe more about your perspective on why, debt is not the problem, rather ignorance is the problem?
Yeah. Look, that gives people an opportunity to participate. This is like a big thing. And there's good debt and bad debt. But you need to be able to participate. Not having access to capital stinks, right? So if you can, a mortgage is a good debt, because you can acquire the whole asset and get 100% of the gain. So if it's a good deal and it makes sense, then the debt is good. Where that can be bad is when people get overextended. They have personal loans, they have credit cards, they take unnecessary risks. And you know what the worst debt is? And I don't care, is these crazy car loans. And I'm going to tell you, I've seen these. I love watching negotiations. So I'm addicted to Facebook cars. And I will tell you, people overextend themselves buying these cars. They buy cars they don't need. I see it, especially, I'll tell you a big thing, coming from Boston to South Florida, that more people in Florida have cars they shouldn't get. It's a culture thing, right? People in Boston don't have this, and I used to be impressed by people's cars. Now I think, I wonder what their credit score is.
Yeah,
It doesn't mean
it's
much.
definitely a status. It's definitely a
It's
status
a
thing.
status. It's like a boat, right? It doesn't mean much to me, right? I used to be impressed when I was young. You want to be impressive, own real estate. That's impressive over time. And it just starts with one. And I would tell people this, start today. If you don't own one, start today. And you're like, well, where do I start? Start with buying your first home. And I think people look for perfect. And even though I didn't nail my first home, because I didn't have a lot of money, it didn't matter. Eventually went up. I eventually was able to buy another home. That one I did crush. I was able to sell both of those, then buy a three family, and then that went up double. And then, like, no matter what you do over time, like, time will make all your real estate deals look great. They just does. It doesn't matter if you overpay in the beginning. If it just makes sense. Land is key. So if you just hold on to it, it will make sense. So you don't want to overthink. I actually don't like a lot of these people that say debt is bad, because I'm going to tell you why. It hurts low to moderate income families. And this is what is terrible. It's easy if you're rich to say that's bad, take no risk, and just stay poor. But that's not fair to you. if anyone listens to this and you're not wealthy and you're low to moderate income, it starts with one home. Down payment is this is why we opened up Next Wave Mortgage. You said why? To do help people with down payment assistance. Like, what does that have to do with investing? That is your first investment for a lot of families, right? It starts with one home, and then that can turn into other homes, right? But I would never encourage people to be overextended or dead to the eyeballs. And it's okay to make extra mortgage payments, right? But I'm pro smart debt. That's what my thing is. And the issue is in America, people make you take extreme sides. But what happens if we don't take an extreme side and we go into the middle and we say, well, what is the middle? Smart debt. Get into a primary, learn how to manage your bills, eliminate credit card debts, and do not get any fancy cars. And the goal should be in your life to take your car to drive it into the ground. If you've never experienced driving your car into the ground, then you might experience having a hard time becoming wealthy.
I couldn't agree with you more. And, I'm thankful that you say that. I would like my wife and 4 children to have a listen at what you just said in the last 2 minutes, because I agree with you. I think sometimes, they tend to not because they know we have the ability to go out and buy the next best thing. But I certainly prefer not to because status is not an important thing to myself. I would like your perspective on what I would call the elephant in the room here, and that is, related to the leverage hangover from 2021 and 2022. Okay. Where a lot of investors were over leveraged, the market was really frothy, and then the rug got pulled out from a lot of individuals as a direct result of the historic run up in interest rates. So, in what you're seeing today, what mistakes are people still repeating today with just nicer spreadsheets?
Yeah, sometimes you got to take a step back to go to a step forward. And I do think, the problem is with AI, sometimes people put in these fancy things and they go to Harvard model, right? Like AI thinks like Harvard people, right? It just does. It's written by Harvard people. So you should know the way it thinks. This is, sometimes it says take out debt to the eyeballs. I would never do this. This is crazy. What people don't realize is if you just slow, methodical, collect some places, you can own 5, 10 places by the time you retire, become a multimillionaire, and have no worries. This is it. You don't need 1,000 places. Forget it, right? Let's just go with, you become a net worth of 10 to 20 million. That's it, right? Nothing crazy, right? Just slow and methodical, and you just build up nice and easy, but with the mindset that you never shift the way that you act. And you do the big mistake is, and I'm going to tell you the big mistake with investors, as they become rich, their lifestyle changes. I was just watching Palm Beach on Netflix, and there's a developer, I think it was H&M, and she said, I think it was episode 4, if this deal does not go through, I'm gonna have to sell my primary residence. And I'm thinking, like, I go on Gemini and I look her up, who's the richest people? I'm like, well, she must be a poor person. No, her net worth is 1 to 300 million. If you cannot survive between 1 to 300 million, look, call it quits. It's over. Like, what are you doing? Like, I'm just retiring, right? This is like, reminds me of the Patriots Super Bowl where they made this comeback 28-3, right? This is only because the Falcons are throwing the football on first down of 28-3. Maybe if you ran the ball more, you would have easily have won the game, right? You took unnecessary risks. And that's what I would say is you also shift. If your net worth is 1 to 300, even in Palm Beach, you don't have to create these risks anymore. What are you going to call it quits? You got to say it's over at some point, right? And do I say 300 million? Yeah, I would actually say 300 million is probably, I'd stop way before that. You don't have to, you got to write, I would say this, you do have to write down before you start. At what point do we just quit? It's like a casino. You got to reduce your risk at some point, right? It's not worth it. I don't want to. I'll tell you a quick story. I actually ran into the guy that you ever heard the movie Wolf of Wall Street? That movie, right? I'll tell you a crazy story. I actually know Jordan Belfort's boss that hired him. And I talked to the guy. And I'll tell you his downfall for everyone listening. This is how it ended. He did get some felonies because that's why I couldn't end up like really working with him, because he couldn't really get licensed. But I became friends with Jordan Belfort's boss. And I said, well, what happened? Why are you doing mortgages? I'll tell you what happened. He had $25 million. So what does a guy do with $25 million? He spreads it all over New York City. And he bought all these homes. And then 2007 happens. What people don't realize is that loans get recapitalized. I actually didn't realize this on my 3-family when I bought it. I didn't look at the details, even though I do mortgages, because I didn't understand commercial mortgages. He didn't have the capital. The market crashed. The bank just took back the properties. And now he lived in his like family's basement somewhere, right? And he's fine now, and he's like an average person. But here's a guy that like escaped the feds, whatever, got a felony, and like you got to keep a lot of money. There was no need to take 25 million. I'm like, I said to him, isn't 25 million enough? And remember, this is 2007, so this is like 50 million today. Is 50 million enough? This is the question. No, this is not the way people with 50 million think. So to anyone that has $50 million today, maybe you should change the way you think, right? Like, it's true. Sometimes maybe you do Andrew Luck on the Colts and you say, hey, I got 80 million, I should walk away. Or Joe Burrow on the Bengals. You know, maybe I got 180, getting CTE isn't like worth it, right? This is like, and ask Tom Brady this. Could he still sling it? Yeah, I could play. I dominate. He just decided to walk away, right? This is the question. At what point is enough, and you not go all in and play aggressive, even if you have a house advantage? At some point, you got to learn the art of walking away.
Yeah, totally. Yeah. I mean, lifestyle creep is a big thing. And you're just talking about lifestyle creep that's like on steroids, right? People that are obviously living a much, richer lifestyle than probably the rest of our, listening audience here. But, that lifestyle creep is absolutely a real thing. And it's so funny that you call out the fact that, we talk a lot about people that are living paycheck to paycheck. And usually when you think like that, you think of people that are maybe in a lower income, type demographic, or 3 figures or 4 figures, means a big thing. But I mean, you're talking about people that are largely living paycheck to paycheck, that are counting on, 6-figure and 7-figure checks in order to be able to sustain their current lifestyle.
Or even 8-figure checks, right? It doesn't end. This is the mentality, right? It's just, it's like the NFL. Why people are broke? The money stopped. That's what happened, and the lifestyle continued. And you got to continue to grind and save, and your mentality cannot change. And this will be probably the hardest thing for people, right? Is to want to like justify their success and start start doing that. In fact, when I started making more money, my weight, I gained all this, like started eating out more, right? Forget it, right? And I'm Slim Phil now, right? Like, right? Like,
Slim Phil as opposed to Dr. Phil
repair
now.
later, right? You got I'm like homemade almond milk, right? So,
So,
yeah.
hey, Dr. Phil or Slim Phil,
Yeah, well,
as
look,
we,
it was a big thing, right? Like, so I would tell people, you gotta keep it real, and you gotta just stay focused, right? There's no magic secret to like, everything. But if you want longevity and success, you don't want to be like a has-been in life. You don't want to lose it, right? I mean, the only thing worse than a has-been is a never was, and I get that. That's if you never tried, you never became. But if you want to stay on top, you got to always continue to get better. and grind every single day. And you gotta I think in anything else in life, you gotta wanna set the gold standard. Whatever that is in life, you gotta have that. You gotta take that from Walt Disney. People don't realize what the gold standard is. Whatever you do, you want to set it. Walt Disney didn't allow alcohol in his parks. In fact, until 2009, you couldn't have alcohol. In fact, Walt Disney was from St. Louis, and they were going to put Disney World in St. Louis. But Anheuser-Busch made fun of him at a dinner party that you can't be successful without alcohol in the park. Well, he said, well, you know what? I'm going to try this thing in Orlando. We'll see how it works. And it was actually pretty successful, I hear, right?
Yeah, well, I mean, the land itself had to be considerably cheaper, but I can't imagine walking around Walt Disney in St. Louis in the month of January either. So there's also that side of the coin.
It is, but he was very clear of what he said. He said, trust compounds slower than revenue, but it goes away faster. So that is the reason why he wanted to create this ultimate family experience. And so that I think that's what, success is try to create the gold standard for whatever you do. And that's what we're trying at Next Wave. That's what we're trying in web development, is to really, and that is one thing what AI will eventually bring. I challenge everyone to increase their gold standard and Walt Disney it.
Yep, absolutely. Amen to that. So Phil, this has been a tremendous conversation and really have appreciated the value that you've brought our listeners here. What might be maybe one or two different ways that we can connect with you to learn more about what you're up to offline?
Well, you can always reach me on LinkedIn or Facebook or Instagram. But if you really want to reach me, just give me a call at 617-529-9317, 617-529-9317. I'm old school, so I like to have conversations with people and really get to know them.
That sounds good. We'll definitely put those links in the show notes for the episode. And for our listeners that don't know me personally, Phil and I are actually the same age. We determined that I might look a little bit younger than him. We had a little bit of a chuckle on that before I hit the record button here, but we're both 47 years of age. So consider ourselves really consider ourselves to be old school, if we're allowed to utilize that terminology, and really a byproduct of the 80s, which probably typifies, why we are the way that we are. So again, Dr. Phil, Slim Phil, Phil Ganz, thanks so much for your contributions on the episode today.
Thank you.
And listening audience, thank you again for jumping into yet another episode of the On the Rise podcast. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the On the Rise podcast. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decisions, please consult with a professional. This show is copyrighted by the On the Rise podcast. Written permissions must be granted before syndication or rebroadcasting.